P12.2. Elston Limited had the following equity accounts on January 1st, 2020. Share capital ordinary 5 par 400,000, share premium ordinary 200,000, and retained earnings 100,000. In 2020, the company had the following treasury share transactions. Elston uses the cost method of accounting for treasury shares. In 2020, the company reported net income of £34,000. A. Journalize treasury share transactions and prepare the closing entry at December 31st, 2020 for net income. Okay, so let's say the first entry. It happened on March 1st of 2020. Purchase 5,000 shares at 9 per share. Well, since we're talking about treasury shares and you purchase them, they have to go up, right? So we are going to have treasury shares at the top, and you're spending money, you're spending cash, so your cash has to go down. And that amount is going to be the number of shares times the cost, which will give you 45,000. Next happened on June 1st of 2020. Sold 500 shares at £12 per share. Since you're selling it, you're getting money, so your cash has to go up, and your treasury shares have to go down because you will no longer have these shares that you're selling it to other people. Now, your cash, that is going to be the number of shares times the amount that you decided to sell it for. In this case, we'll give you 6,000, and your treasury shares, that is going to be the number of shares times the cost that you paid, right? Because your treasury shares, they're not going down by the same value, by the same amount, because you did not pay 12 for them, right? You paid 9, so that is going to be 500 times 9, which will be 4,500. Now, what about the difference between these two? Well, if you remember the sketch that I showed you before, this one, when we're dealing with treasury shares, this amount is always going to be the number of shares times the original cost, which is what we just did, right? And this one over here. And the share premium treasury is going to be the difference between the two amounts. So over here, we're going to have share premium treasury credited by 1,500. Next one happened on September 1st of 2020. Let's see. Sold 2,500 shares at 10 per share. Well, we are selling it, so the accounts debited and credited are going to be the same for the same reasons. And the share premium treasury, it's still going to be the difference. So let's see. How much money did we get in the sale? That is going to be 2,500 times 10. That gives you 25,000. Your treasury shares, that is going to be this 2,500 times 9, which gives you 22,500. And your share premium treasury, the difference is 2,500. Next one happened on December 1st of 2020. Let's see what it says. Sold 1,000 shares at 6 per share. Okay, well, you're selling something, so again, your trash goes up and your treasury shares goes down, right? For your cash amount, that is going to be 1,000 times 6, that gives you 6,000. And for your treasury shares amount, that is going to be 1,000 times 9, which then gives you 9,000. Now, you see where I'm getting, right? Before, you saw that every time we deal with share premium treasury, we are crediting it, right? But here we cannot credit it. Why? 2 reasons. Well, if we credit it, that difference is 3,000, right? So we would have to put that 3,000 over here. Are the two sides equal? They are not, right? Over here we would have 12,000 and here we would have 6. So this is the first reason why. The second reason why has to do with the number, your selling price. This is your cost, right? All of the entries before our current entry of December 1st, so this and this, all of their costs were all of their selling prices were above our cost, correct? But this one, our selling price is below our cost. And in this kind of situation, your entry, the position of the share premium treasury would be different. You can actually take a look at this here at this cash that I made. This disposal means when you're selling treasury shares, if you're selling it above cost, which were all of the letters that we did before, they were all above cost. This is the entry that you would be making. If you're selling it below cost, there are two different entries that you could be making. It could be either this one or this one. In our case, we would be using this one over here. So when do we use this one, this entry over here? Well, you see that the difference between these two, that is 3,000, right? Between this and this, that is 3,000. So we can actually debit it over here. But somewhere you would keep an account for share premium treasury, a T account. And you would have all of your increases and decreases over here recorded. If for some reason, let's say that your final ending balance was, I don't know, 2,000. If it was 2,000, you actually need 3,000, right? Do you see the difference over here? This is 3,000, but you would not have 3,000. You would only have 2,000. In this case, then we would have to get that extra 1,000 from our retained earnings. And this is when you would use it. But in our case, we have enough. So we can just go ahead and debit share premium treasury. The difference between these two of 3,000 pounds. B. Open accounts for share premium treasury shares, and retained earnings. Post to these accounts using J10 as posting reference. Okay, so the first one would be share premium treasury. So over here, share premium treasury, T account. For this one, the increases happen on the credit side. So here we have a plus and here we have a minus. The other one that they asked was treasury shares and retained earnings. So here we would have treasury shares. For treasury shares, it is actually the opposite. So the increases happen on the debit side and the decreases on the credit side. And the other one that they asked was retained earnings. The signs are minus and plus. Okay, so they're asking us to post these numbers into the accounts, right? The first thing that we need to do is to check for beginning balances. Share premium treasury over here, no, right? We just have share capital ordinary, share premium ordinary, and retained earnings. So we are going to have a beginning balance for retained earnings, but for the rest of them, I believe there are no beginning balances. Okay, so let's go ahead and first write this beginning balance of 100,000. If it doesn't say anything, that means that the number is positive, and positive numbers are on the credit side of the T account retained earnings. Something else as well, here, do you remember? In 2020, the company reported net income of 34,000. Net income, not net loss. So that number is also positive. So we also have to go ahead and include that 34,000 over here. Okay, so let's come back to the share premium treasury. Here we have a credit of 1,500. Here another credit of 2,500. And a debit of 3,000. And actually, remember that I just told you about the balances and how you have to debit retained earnings if you don't have enough. In this case, we didn't have to debit retained earnings because before this entry, we actually had a balance over here of 4,000, right? We actually had a balance of 4,000. So we have more than 3,000. So that's why we could debit it and we didn't need to use retained earnings, just so you know. So here let's not forget to debit that 3,000. And that is the last one, so we can go ahead and calculate the value that will give you. This side has 4,000, right? So you have extra 1,000 in this side. That is the ending balance or disty account. For the treasury shares, when you bought them, you have to increase them by 45,000. What else? Credit of 4,500. Another credit of 22,500. And less credit of 9,000. Okay, and now you would be ready to calculate the ending balance. In this side, we have 36,000. So 45,000 minus 36,000, you have extra 9,000 in this side. This is your ending balance. And for retained earnings, we don't have any other changes, I believe. So you can just go ahead and add them up like this. C. Prepare the equity section for Elston Limited at December 31st of 2020. Okay, so the equity section, which statements present equity? Statement of financial position has equity, right? So how do you make a statement of financial position? You always start with the name of the company. In this case, it is Elston Limited. And then you follow up with the kind of report that you're making. In this case, it is a statement of financial position. And after that, you would have the date. I believe it is December 31st of 2020. Then you'll have a line separating the title from the information below. And equity, that is equal to your raised capital plus your earned capital. And then you have to deduct that from the treasury shares. So over here, we would have equity section like this. And then you would have all of your raised capital. Where does your raised capital comes from? It comes from the money that you got, that you raised from issuing shares, right? So over here, you would have all of the shares that were presented in this exercise. So in the beginning, they had share capital ordinary for 100,000, share premium ordinary 200,000. So I'm just going to start writing them here. The first one was share capital ordinary. And then we had share premium. Make sure that you write the full name, okay? Don't write it like me. Share premium ordinary. What else do we have? Share capital ordinary, share premium ordinary. Retained earnings, okay, we're going to add that, but not now. We also had the share premium treasury, right? In this case, our ending balance is 1,000. This is also a kind of share, so you have to add it. So it's going to be share premium. That's not how you spell premium. Treasury. And I believe these are all the shares that you have in this exercise, right? Yeah. This part represents the raised capital, right? But like I said, equity, that is equal to your raised capital plus your earned capital. Your earned capital comes from the money that you got by running the business, right? So that comes from your net income or your net loss. And your net income goes to where? To your retained earnings, right? And that reminds me that we didn't do the closing entries, right? Okay, let me finish letter C and I'll come back to the closing entry. I believe it was letter A. I think they asked something like that. Okay, so your profit comes from the retained earnings. So we would have retained earnings over here. And after you add your raised capital with your earned capital, then you would have to less your treasury shares. Okay. So for the share capital ordinary, that is the value that they gave us originally, 400,000, and then share premium ordinary 200,000, right? So over here we would have the first number always is after the money sign. So you can put 400,000 and then 200,000. And then your share premium treasury, that comes from that ending balance that we got over here. So that is 1,000. The retained earnings also comes from the ending balance that we got over here. So that is 134,000. And you're gonna subtract all of these numbers from your treasury shares, which in our case we have 9,000 treasury shares. Okay. So we are going to add all of these numbers and then subtract 9,000. Let's see how much that is. And here you would have total equity, because this is a total amount. That is 726,000 pounds. And you would finish by having 2 lines under the total equity. Okay, let me come back to the closing entry. I think they asked that somewhere. Yeah, for letter A, right? They said prepare the closing entry at December 31st of 2020 for net income. Okay, so this should be after all of these entries. Okay, so I'm just gonna write it over here. Okay, so the date of the closing entry, that is the end of the year, so that would be December 31st of 2020. And when you make a closing entry, you have to transfer the amount that comes from your retained earnings, which comes from your revenues and expenses, to the income summary account. Okay, and since we are going to transfer this retained earnings, we would have retained earnings credit, and we would have income summary at the top. Okay, why is that? Because income summary, if you were to have, for example, income summary T account over here, your increases happen on the debit side and your decreases happen on the credit side. So we are transferring this money to the income summary, which means that our income summary is going up. So this is why. And the value, they told us, right? In 2020, the company reported net income of 34,000. So we would have 34,000 for both of them. And make sure that you specify, here I don't have enough space, but make sure that you specify that this would be a closing entry.